Hello everybody, welcome to TraderMerlin Show. Happy Monday, November 2nd, the day before the bells toll. Election day, so hello everyone. Hello Thomasina, Brendan, Jeff, Big Eb, Brian, Tom, Izzy, Lori as well. Yes, so for many people out there who saw Tom's quote, it says, hello voters. Yes, I won't pontificate at all, but make sure we get out there and vote today. Even if you think that your vote doesn't matter, go out and vote. California, you better vote because I don't want to be losing my Uber and my Lyfts, which were very handy on Halloween evening. All right, guys, today's show, we're going to talk about, well, a little bit of the option side of things. If you didn't notice today, some of the markets were actually looking fairly decent. Had some nice gains out there, contrary to what I expected to have happen today. But volatility's been picking up, and certainly if you look at the premiums for some of these options, they've been getting fairly lofty, which presents a lot of opportunity for those that know what they're looking for. And of course, when we talk about people in the options world knowing what they're looking for, I've got none other than Tim Blotzer joining me today. Tim, how you doing?
I'm doing great.
Well, thanks for coming on. I'm hoping this is like an early Christmas for you, given all the volatility from earnings and economic calendars and voting.
And the VIX, and my Christmas lights are up.
Already? Are you one of those ones that just leaves your light up year round and you just don't turn them on when they're not, supposed to be on?
Well, they're all in. They're not. I'm not turning them on, but there was a 20% discount because now at my age, it's why do something yourself when you can pay somebody else to do it.
All right,
and they did it.
Good way to look at it. Tim, I've been following you post, for those that haven't followed him, Tim does a lot of posts on Facebook, talking about some of the spread trades he's in. As you guys may have remembered from his previous appointments on this program, you can go back and look at the archives. He does a thing called the Rubber Ducky, so you can just go to the YouTube channel and type in Rubber Ducky, and you'll see, or at least go to TraderMerlin's YouTube channel, and you'll see the Rubber Ducky, So we won't go into the details of all of that. But how have things been going from the trading perspective? Is the increased volatility helping you?
Oh, yes. I mean, the VIX had gotten down around 25, and then we got up to 40 here in a week or two ago, and now we're sitting, where are we sitting today? 37.13. So that's great. It jacks up the prices that you get on the premium, and it lets you get further away, because I like to say just stay below here or stay above here. I don't have to be right, and it gives me a little bit more elbow room, just like today.
Mm-hmm. Now, I brought up the VIX here. Now right now you're looking at the VIX at about 37, which is a pretty historically high number. And for those that don't know, there's a very simple, cheesy mantra that people like to use with regards to the VIX, and that is, when VIX is high, it's time to buy, and when VIX is low, it's time to go. And right now,
that's not quite the true saying.
Oh, okay.
When the VIX is low and reverses, it's time to go.
Yes.
When the VIX is high and reverses, it's time to buy.
Well, and I'm going to do I do what you did to me. I'm going to correct you on all of that because it's irrelevant to me whether VIX is historically high or historically low, because right now VIX is at 37, which is relatively high compared to what it's been at for the past year, other than February. That said, the VIX could go, you could have it at 40 and all of a sudden drops down to 30 and you're like, okay, I'm going to go and jump in here, right? VIX is high, time to buy some markets. And then VIX jumps to 60, 70, 80, 90, 100 and just goes parabolic. So it's an indicator, guys, that will help clue you into what the market is feeling at that moment, but don't hang your hat on VIX exclusively. There we go.
No. Or, I look at different indicators, but there's not a one of them that's the only thing you look at. Right. You're looking at a puzzle. So you got to put the pieces together. And, the VIX, it doesn't make any difference where it is, like you said, because there's a strategy for whatever it's doing. And we sat at 11 and 12 for a long time over the years. Yeah. And then, with 2008, we shot up to 92. And then here this March, we got up to 80. And that's why they call it the fear index. They don't know what's going to happen. And so you just have to know how to take care of it. And that's the beautiful thing about options is no matter what the market's doing, no matter what the economy's doing, there's a way to make money with options, up, down, or sideways.
I'm mapping it out here on the screen because for the viewers, when I first started trading, there were these two lines, and those lines are at the numbers 20 and 40. And my mentor and what I was taught back then with VIX was, well, a low VIX, remember, when VIX is low, it's time to go. That means you should get out of your long positions. That was when it was below 20. And as you can see here, I can go back almost, I would say 90% of the time, going back the last 6 years, it was down below 20, which basically means you wouldn't have been long at all. And if you used VIX, you probably would have been out of the markets. Now, that said, when it's above 40, VIX is high time to buy. You'll notice these actually do kind of correlate with market bottoms. But, of course, we can say that after the fact.
Yeah, hindsight's always 20/20.
It's a beautiful thing. So let's walk through a couple of things that you look at. I know last week you were putting out a lot of Facebook updates and you weren't doing tweets, but you were talking about the FANG stocks. You had the Apple, you had Amazon, Facebook. Was it Google reported last week as well? And I think the week before you were talking about Netflix.
Yep.
These are the juggling the chainsaw kind of moves. What was it specifically about those that you wanted to trade?
Well, kind of my rules for trading on earnings is, generally speaking, it's got to be something that I recognize and know. I'm not going to go trade, JQ97 or whatever it is, because I've never heard of it. So I look for the names, obviously, and the thing I like, I want the stock to be over $100, because those stocks are stocks that perform and they're stocks that pay. I want the volatility for that expiration to be over 100%. And last week, Amazon and Apple never got over 100%. And I don't think Google did either. So last week I traded Facebook, UPS, and Etsy. And because the volatility was there, I could get far enough away from the current price and get decent money. And this week I'm watching Peloton and looking at who is the other one. Where's my list? That I know I wrote it somewhere. That's the thing when you get old, you write things down, but then you forget where you put them. But but it's and with earnings, because anything can happen.
Yep.
You can have great sales, great bottom line profits, but not enough new subscribers like Netflix, and they kind of beat them up a little bit. But I was able to get far enough away to where it didn't matter. It dropped, but it never got down to my strikes. Go ahead.
I'm bringing up the charts here, kind of as we speak, so to see kind of how these things match up with the talk track. So Peloton, huh?
Yeah, the only thing I don't like this week, and this is I played it before, but it was $5 spreads. Now it's only $1 difference between the strike prices.
Uh-huh.
And it's either I'll widen out the spreads or just take a look at it there. But I think it's where are you, Peloton? I'll put you on there. And the volatility, what that's running. If you look at on the option chain, it will show me that Peloton is at 129% already. Mm-hmm. And I think they announce on Thursday. So we get up to 140, 150%. I love it.
And what is it? I mean, is that one of the filters you would say that you use, is looking at the implied volatility and seeing?
Absolutely. Because, well, first of all, in anything that you trade, it's got to be liquid. So, on average, over 1 million or 2 shares a day, and then 300 contracts in volume and 10,000 in open interest, and then a small difference between the bid and the ask. Those are rules that are universal, that before I trade anything, if it's not liquid, next.
Mm-hmm.
Because, it's easy to get in, and sometimes you just can't get out. Because then what happens is the difference between the bid and the ask is so wide. To buy it, it's a dollar, but to sell it, you get 20 cents. Yeah, no thanks.
Yeah.
And then I look at what's the volatility. Okay. And like Peloton is 129%. And then there's the expected move that right now is saying it could go up or down 13, say $14. So I would want to be probably 15 to $20 away. And it's at 113. So minus 13 takes me to $100 on the put side, which I don't know what's it paying right now. And I wouldn't do this now anyway. I do it the day of earnings, and it's 15 cents. Well, of course, the market's closed, so maybe the numbers are screwed up.
Yeah.
But I do it so if they're going to announce after the market on Thursday, I'll get in before the market closes on Thursday. And my goal, well, it would be perfect this week because it expires on Friday, to get out that day. And sometimes if it makes a move up or down significantly, you can close out, say, the put side or close out the call side. Or if it's far enough away and it's not a threat, a lot of times I let them expire worthless, because then there's no commission and no fees.
Right.
And those are hard and fast rules on earnings plays, that if it doesn't meet any of the criteria, next. Then, like I said, like looking at Apple and Amazon last week, I think we're at 60% implied volatility. No, thank you.
Right. Yeah, I mean, it's interesting because some people think that that's your approach is crazy and volatile as well, but there's certain risk management pieces that are being put in there, so it's not that. I mean, certainly there is the potential for something to rail against you, but the overall probability in that case is that it's not going to.
Right, and that's because you can get a lower delta, which is a higher probability it's going to be out of the money at expiration.
Right.
And then I look at the sign that's on top of my monitor here that says, don't be greedy, don't be stupid, follow the rules. Because I've been greedy, I've been stupid, and I've broken the rules. Not with earnings.
Yeah, it's funny because you've got a bunch of things that you look at here. Let me bring this up. This is the option chain. Let me bring up real quick.
I'm not seeing anything.
Oh, you won't see it. It's the Skype thing. If you're on the YouTube channel, there's like a 40-second delay. So he showed me this spreadsheet, guys, and it's kind of funny because I think this is a wise thing to do. If you've been following Tim on Power Trading Radio or this program for the past several years, he really focuses on some very basic pieces of risk management. And notice at the top of this sheet, I know it might be hard for some of you to read it. I'll zoom in a little bit here if I can. This is how he uses to track his trades. So it's just a simple spreadsheet he uses to track his trades. And it says, it's not the money you make, it's the money you keep. It also says, don't be greedy, don't be stupid, follow the rules, trade what you see, not what you think or feel. And I think everybody right now could probably be bobbing their head going, God, I've been greedy, I've been stupid, I broke my rules, I got emotional about it. And you probably made those mistakes so many damn times that you literally took time to write it on your trade tracker. I love it.
Yep. And I still have to look at them to remind me, because it's still tempting.
Yeah.
Because we're emotional creatures and we make a lot of our decisions off of emotions. And I didn't have enough room to add it, but it's trade what you see, not what you think or feel, or what the talking heads say. I don't, I'll turn on the financial channels, but I don't listen to them. I only listen to Merlin.
Oh, thank you.
You fascinate me because you follow so many things, are so good at it. I have trouble just following the SPX.
Well, I think I think you could definitely follow it. I think what you've done is you've simplified things. For me, there's an addiction to the markets, and I'd like to know as much as I can. And as the viewers will tell you, I don't know everything, and I'll never claim to know everything. I always try to build my knowledge every single day on some aspect of the markets. But the day that we stop learning on the markets is the day that we die, because it's always going to be changing.
Yep. And and we learn from our students, our clients. I don't know whatever name we want to give them, but usually we learn things that we shouldn't do.
Mm-hmm. I agree.
Just like when we started, my first 3 months, I got my butt kicked for 3 months, and mainly because I didn't listen to what I was being taught and didn't follow the rules. And that after losing enough money, you say maybe I should start listening.
It's funny you say that, because I did a workshop in Irvine for some graduates on last Wednesday, and that was one of my same things. One of the questions was, how long did it take for you to kind of, get consistent? I said, well, consistent, that's kind of a subjective word, but how long did it take for me to stop losing consistently? About 6 months, and it was in the same thing. It's because I was just stupid, arrogant, thought I was better. I didn't listen to my mentors. I didn't follow the rules, and that's, here you are having traded for a long time, and you still write it on your trade sheet. So I thought that was a nice one.
Well,
go ahead.
I'm not very analytical, but it was, I want to track and see, what is the market telling me? Let the market tell me what to do.
Yeah.
And, and what happens when you're trading, what you find is you'll ignore more things than you pay attention to. I got, here's my nice to knows, and here's what I really need is the need to knows.
Yeah. Yep. Joseph, you guys are great. Joseph says, Merlin is not emotional. I've been known to break a keyboard or two every now and again, and get upset at some of the trades I've been in. I'm not infallible there. And Brendan, I would not put myself in a master trader category. I think that's just arrogant to call yourself a master of anything, really. Unless you're in Seinfeld, then you're the master of your own domain. I like that. That's good.
We're still rookies.
Yeah, we are. We're always learning. All right, let me. There was a question came through earlier, and I forget who it was from, but it was saying basically that you made it a point in the past to talk about not trading during like an economic announcement. How is tomorrow's activity going to change for you? Are you taking a step back a little bit with the amount of trades that you're doing just until the dust settles from whatever the hell happens tomorrow?
Yeah. Well, one of the things that's nice about trading the SPX, it has Monday, Wednesday, Friday expiration. So I take Tuesday and Thursday off. So I wouldn't be trading tomorrow anyway, but who knows what's going to happen? And not only what happens, what's the reaction of the market? I thought today, going into the close, we'd see more selling, some profit taking before all this. It didn't do it. We went sideways at the close. I thought, well, that was kind of weird. I was glad of it because what did I sell? Is I had the, where are you? 3270 bull put that I did at 11:30. And I waited, and then about 12:23, I did the 33.30. And I was very conservative today, 35 cents on one side, 30 cents on the other, and ended up with a 14.9% return for the day. I'm okay with that.
Yeah.
And like one of my guys always says, if you're not okay with 15% for the day, you need a checkup from the neck up.
Yeah.
And so between the election, I don't know what's going to happen. I don't know what I'll do Wednesday.
Right.
We'll just have to see what's going on. And the one that I'm more worried about is Thursday because we've got the Fed announcement and we have Powell speaking.
Mm-hmm.
I stay away from Powell. And the problem is, they announce whatever the minutes are at 11 o'clock my time, and then Powell starts speaking at 11:30, and he's been going till 20 to 1. You got 20 minutes before the close.
Yeah.
And the last one, I didn't even trade that day because by the time he stopped talking, there's no premium left.
Yeah.
And then Friday we got the employment situation for October, and that's one that can move the market too. That I watch. Let's see what the numbers are.
Yeah, I actually. Normally, I would say stay away from these types of things. What I'm trying to free up capital so that if in fact we do get a situation similar to what we had happen in 2016 with just a crazy lock limit down again, I want to be able to be taking advantage of that one. So that's my primary objective. But I sold some puts today on IWM, but just very short term, and through Friday, and I noticed that the amount that they were paying was significantly higher. Getting a 5% rate of return for a couple of days is good in my book.
Well, and everything's a trade-off between risk and reward.
Always.
And I tend to be more conservative. I'd rather have a high probability of success and keep the money that I make than to take a risk for more money and go to max loss.
Right.
No thanks.
Yeah, you just with the strategy that you employ, you just have to be really careful that you don't let that big one get you, right? Because you're shooting for a lot of small winners, which is great, but every now and again, there comes along something that wipes out a large chunk of that, and your job that's your first and foremost objective is to be that risk manager on the one that gets away.
Yep, and what I always say is you got to treat trading like you're a tennis player. How does the tennis player move in a match? They're on the balls of their feet, ready to go wherever they need to go. You need to be that same way as a trader. You're on the balls of your feet. You see something to go in against you, get out, take the small loss. Right. Every big loss starts as a small loss. And, you see you're wrong and one of the things I say all the time is, when do you get out of a trade? And the answer is any time you want. You're in a trade, you just don't feel right, get out. It's going against you and it hasn't gone to my max loss. Get out. You've got to manage your risk. And you should never risk more than 1% of your trading account in any single trade.
I like that one. I'll give you the 1% risk. I like that.
Well, what was interesting when I was getting my butt kicked when I started with a different company, the risk management rule was 5%.
Ooh, that's big.
Yeah. And I learned Let's just put it that way.
Yeah. It's funny. I also, in that workshop I did for the grads the other night, it's like, one of the main things I learned, it really was all about, things I wish that people told me when I first started. And I think that they do an injustice on not disclosing things and saying, look, it's going to be a challenge. It's going to be rough. You're going to find out more things about your personality and psychology than you probably ever wanted to know, and you have to be open for that. One of the big things for me was the amount of money that you lose per day. You have to set that number, and I've told these viewers, they all know it, but like there has to be a number that you lose this amount, and you're okay with it. Like nobody wants to lose, but if I lose $500, I no big deal. I'll be unemotional. I'll walk away. No problem. But if I lose $5,000, I'm breaking keyboards. I'm a jerk. Don't come near me. I get frustrated. And for that reason, you have to put stops in place or some system of risk management so that you never get to those pain points which change you psychologically and make you a totally different person.
Yeah, and you've got to have those limits too. Like I'm willing to take up to a $2 per share loss. Because let's say I get 50 cents on my bear call and 50 cents on my bull pot. Okay, I collected $1. Okay, now I buy this back for $2. I'm really down $1, but then I go looking for other trades to make that up. Because if it's going against me on one side, I should be, if it's going down and hurting my bull put, then I'll go look for a trade on another bear call and do, maybe closer than what I did in the first place.
Right.
But it's it's a lot of fun once you figure it out. And what I say, like with the Rubber Ducky, I've only been doing it for 12 years, so it's still in beta testing.
Yeah. It'd be a lifelong beta test. Tom says small lose moves very quickly to a big lose. Yeah, it usually does.
It can.
And then when it happens, what ends up usually happening, some of you have been in this position before, you should get out, you should, but you freeze, and in your head you say, this cannot be happening. This just can't be happening. And then you
got to come back. It's got to come back.
It'll come back. I know, oh man, the number of dollars I wish I had for every time I said that.
Well, and the other thing too is when it is going against you with this volatility, it may not even be in the money yet, but it costs you $6 to close it out.
Yeah.
And it's like I had that, Etsy went into the money on Friday, and it was more expensive to close it out than to let it go in the money. And it went in the money a little bit, and it was like, okay, I'm down $1.40, and I'm thinking of it's like the SPX. I can't own the SPX, so I'd never get assigned. They just take the cash. And it's like, oh, this is a stock. I got assigned. So this morning, it was fun to watch the numbers bounce all over the place. Oh, you're down $103,000. I'm trying to figure out why. And just like, forget it, stop looking. And then this morning I owned the stock. I waited till it went above 123 and then sold it. And so I went from a $1.40 loss to what? I made $500 on the deal. So it was better than losing. Yeah. Don't make me think.
I'm trying not to. Speaking of thinking, you sent this one in. You sent me the spreadsheet. I kind of wanted to just look at it for a second to maybe get people an idea of what you're looking at, because obviously there are certain rules that you follow, and you can, that's the Rubber Ducky strategy. And you guys, right. I'll even bring up the email here if you want. On the screen, it's Tim Blotzer at yahoo.com if you want more information about the Rubber Ducky or any other thing that Tim was talking about today. But there's obviously specific rules that you're using for your entries and your exits, but I thought it might be interesting to talk about this spreadsheet a little bit, because for the podcasters who might be listening on iTunes, I got a spreadsheet up here with, it looks like about 10 or 12 columns, and on the left-hand side on the way down, there's obviously the times of the day, and since Tim's on the West Coast as I am, you're looking at East or West Coast opening. So it says 6:30, 7, 7:30 in 30-minute increments all the way to the close. But then you've got current price, SPX plus or minus, trade, credit, $ADD, ES, EM, VIX, BC Delta, close BC, BP. So all these different factors. You made it sound like you're oversimplifying things, and I think you are, because you're obviously looking at a lot of different information to plan out those trades. How do these criteria help you?
Well, you want to get a feel for the market, and sometimes not everything is telling you the same thing. Oh, advancers, decliners, the ADD, it's plus 2,300. but the futures were down 20 points. Well, that's saying we're going up, and the other one's saying we're going down. But when you get them both in sync, okay, that's kind of nice. I put more weight on the futures, and by the way, I have spreadsheets with the different time zones because everybody was asking, well, I'm on the East Coast, so I've got one that starts at 9:30.
It's not that hard to change, my friend.
I know, but we're traders. What do we know? And then it's just I'm looking for more of what is the market doing. Now, everything comes down to the chart. You got to see that, and it's like I say, don't be bullish when the market is bearish, and don't be bearish when the market is bullish. Well, how do I know what's what? And like I said, like this morning, the advances decliners were plus 2,300 at the open. The futures were up 32. Okay, that's telling me we got bullish activity. And then the expected move that's on TradeStation and Thinkorswim was it could go up or down 37 points. And when I put a trade on, then I'll put on what was the delta when I put on my bear call, and then what is it as it goes throughout the day to close it out. So what is this one was the bear call. It was at a 9 delta. And it was 10 cents to close. The bull put at that same time at 12:30 was a 2 delta, was 5 cents to close. And so I just like to see, all right, I sell to open, I'm going to buy to close. What would it take to close? And what's my delta doing? If my delta is moving up, more than likely that's going against me. And if it's getting more expensive to close it, and if, let's say, I've got a bear call and advances decliners are going 2,300, 2,400, 2,500, it's moving up, giving you positive direction, and the futures are going plus 30, plus 40, plus 49. Where else did it go? And then it went to 41, to 26, to 16, to 12, to 25. Okay, I've got to adjust my trade accordingly. When I see that there's strength to the upside or the downside, my response is, you know what? Get out while it's cheap.
Yeah.
You could always get back in. But, I get a lot of people look at a lot of different things, like I'm sure that you do. And I've got one guy that keeps telling me, you got to watch the NASDAQ during the day. It's like, no, I don't. Like, I follow the KISS method. Keep investing simple and safe.
Yep.
And what I like about the SPX, Monday, Wednesday, Friday, paydays.
Yeah, that's.
I don't like to hold overnight.
Right, and there's no delivery on the SPX. That's nice.
Oh, right.
Question from Tom. He says, I see the prices of at-the-money SPX puts and calls being unbalanced at times during the trading day. Mm-hmm. Do you use this as a signal?
The what?
The at-the-money SPX puts and calls.
Oh, yeah. Well, that's a hint. And like I said, that would come under my heading of nice to know. Because when you look, okay, what's an at-the-money call costing and what's an at-the-money put costing? And usually they're pretty much about the same price. If there's a big discrepancy in that, that's a hint from the market maker. Oh, it looks like the market's going to be going up, so I'm going to charge you more for a call. And puts are cheap. But it doesn't necessarily work out that way, too. It's like around earnings. Just because its earnings and volatility is high and maybe calls are more expensive doesn't mean it's going up. There's nothing that's infallible. I don't know of any indicator that's 100% accurate. Yep. You got to look at it's like, okay, I bought this puzzle. I can see what the picture's supposed to look like on the outside of the box, but once you dump all the pieces out, good luck.
Mm-hmm. Right.
And that's, I say what you have to get good at is reading the charts. And then when you're good at that, you have to know what strategy do I apply based on what I see. Those two in the big look of things are easy. It's the other 3 things that I look at that get you every time. You got to have discipline, you got to have patience, and you got to have rules.
Yep.
And those will follow you the rest of your life.
Yep, I agree. Brendan, I like your comment. He says, this is a good one. He says, what seems simple to one person might be alien hypermath to another and vice versa. Yes, absolutely. And I think that this goes back to just having an understanding that while something may be challenging, doesn't mean that you can't learn it. You just have to get the right people to teach it to you.
Yeah, it's just like anything else. There's a lot of different strategies. And years ago, everybody was talking about back ratios. And it was like, oh, I want to see what this is all about. And they say, oh, go talk to John. I talked to John. Said, oh, how long have you been doing it? Oh, I've been doing back ratios for over a year now. Oh, great. So I want to learn from you. How much money have you made? Oh, I haven't made anything yet. Goodbye. You know, I already know how to lose money. I don't need to learn that. Yeah. And it's just like, you know, the thing with like options that most people stay away from. Oh, they're too complicated. Options expire. Well, yeah, that's a good thing if you sell them. But first thing you got to learn is the terminology. And that in and of itself is enough to drive you crazy. Bear call, bull put, bear put, bull call, straddle, strangle, butterfly, all that stuff will drive you crazy. And then once you learn the terminology, it's now, well, what strategies do I use? And when I started, I lived in 3x5 cards. I would say, okay, here's a bear call. This is what it means, and this is what you look at. Here's a checklist that you got to go through. And I had a whole little index card file full of all the strategies and definitions and everything else until I learned. It took me about 9 months to where I didn't need to refer to the cards anymore. Mm-hmm. And if I could find those cards, I'd be selling them to you. I mean, sharing them with you.
Hey, you still have little 3x5 cards with nice jokes on them, though.
Yes, I do. Let's see. Did I tell you what's Darth Vader's wife's first name?
No.
It's Ella. Elevator.
See, here's the thing. If you threw out some crazy complex formula, I would have gotten it right away. But something so basic as elevator, I was like, okay. See, some people's brains just don't get that stuff.
Can't help it. It's under dad jokes. They're all clean, and it's why are baby ants so confused? No clue. Because all their uncles are ants. Those were just off the top of my head without looking at the card. So
when's your next stand-up night? You know,
no,
I'm bringing tomatoes.
One of the guys that I went to high school with, he's got an ABBA tribute band. They're not going anywhere because they did cruise ships. But he used to run the Catch a Rising Star here in Reno, and he would just call me up and say, "Give me a joke." I said, "Don't you want me on stage?" He said, "No, I've heard all your jokes. No thanks." But that's okay. At least they're clean.
They are. Let's see. Last one here. Baldhead Bees says, Tim, did you get into the earnings plays today on PayPal and Wayfarer?
No. It wasn't enough volatility or it was too cheap.
Okay.
And that's, like I said, I don't know. I know PayPal had the price, but it didn't have the volatility, I don't think. Because I started through, and all the ones that were coming this week, Peloton, Roku were the only ones that caught my attention. And Peloton and Roku, both of them, I think, are Thursday, which is I really like because I'll get in Thursday before the close. Mm-hmm. And Friday it expires, or I buy it back and close it out. Like I did UPS last week and bought back my bear call for a penny, and the bull put expired worthless because it was so far away. And same thing with Facebook. Came down and teased a little bit. Actually, so did UPS. But it never went in. Well, Facebook went in the money a little bit, but it bounced right out and took off. And same thing with UPS. UPS never went in the money, but it took off right in the last few minutes. It's just like last Friday. The last 3 minutes, we moved 20 points on the close on the SPX. Mm-hmm. You're not supposed to do that. Stop that. It
happens, man. It's crazy. I love the Friday action. It prevented me from being filled on some puts I sold, so I was happy about that.
Yeah. And that's the thing, especially with trading options and selling options, you have to watch the close. Now, stocks, you don't get the wild swings as much going into the close, but the SPX used to be Friday going into the close. I mean, we had one we moved 200 points in the last 5 minutes of the day. That can hurt.
Yeah.
And then it went to, Monday's starting to make big moves at the close. Then Wednesday. And now, for the last couple of weeks, we've just been going sideways at the close. Mm-hmm. But Friday, we had a big shot. Today, did nothing. Stayed between the opening high and the opening low all day. Well, kind of.
Yeah. Well, yeah. The opening, it's only 30-minute high. But,
yeah.
All right, cool. All right, so what else you got? I know that you're going to be working on some new website stuff here and getting some other things going. I've got your emails on the screen, which is timblotzer@yahoo.com for anybody who'd like more information. How else would you recommend our viewers stay in touch with you?
Well, you know what? The first thing when I get, because I've got a group now, it started with like 10 of us just exchanging ideas, and then word of mouth spread. And now there's over 300 and something people that, on Wednesdays and Saturdays, I'll do a session and we'll talk about what's going on out there. But the first thing I always ask is, what's your option experience? If you haven't taken an options class somewhere, like maybe OTA, take a class, because you got to get the basics down first. Because going into credit spreads, bear calls, and bull puts, you'll be lost and frustrated and ticked off.
Mm-hmm. Yeah.
So you've got to have that foundation. There is a lot to options, and you've got to understand the terminology, the different strategies, what to pay attention to, what to ignore. And I guess that's the same with any trade that you're doing. You're going to have rules for whatever that is. If you're buying a call, there's certain rules. And the thing is, I love just buying a call from 2004 to 2007. I did that in stock splits, and it was great. And everything kind of changed. I forget what happened in 2008, but coming out of that, it didn't work. Yeah. And so that's when I started spreads. And like I said, it's still in beta testing, so we'll see what happens.
Oh, I'm sure it will work out fine. Beta testing, you've got plenty of time under your belt for it. It'll be fine.
Well, and the thing is, I started doing this in 2004. I was working in retail for years. My dad had Alzheimer's. I started taking care of him. I told my boss, look, I can't work these screwy hours from 6 a.m. to 9 o'clock at night. I need to be home when it gets dark because my dad's going to burn my house down, because he had sundowners too. And my boss said, no problem, you're fired.
Oh, nice.
And it's like, now what do I do?
Yeah.
And I stumbled across a class on stocks. And like I say, I haven't had a real job since 2004. And I don't consider, even teaching for the different companies that I've done it for, it wasn't a job to me. This is fun. And now it's like sharing the knowledge, because this set me free. That and I quit my last job July 29th.
Look, it enabled you to move up to Reno.
Sparks.
Sparks, sorry.
Yeah, and we're going to get our first snow this Saturday. So
yeah, awesome.
I'm okay with that.
I'm hoping you get a nice snowbank up there this year. I'd love to come up and go do some snowboarding in Tahoe.
Yeah. Well, we have Mount Rose here. I haven't skied that one yet. So all the years I've been coming up here, I've never gone there. So
been a few
years.
Give
that one a shot. Yeah.
All right, Tim. Well, thank you. And it was a short notice today. I appreciate you coming on. I hope that your trades fare well this week. I know you're going to have a lot of volatility over the next couple of days, so be careful out there, my friend.
I shall. I'm always, like I said, the fast nickels instead of the slow dimes.
Absolutely.
And getting paid 3 times a week.
Love it.
Like I said, today was 15%. And if I get that Wednesday and get that Friday, I'm okay with that.
Yeah. Yeah. Even do it one time a week. It's plenty.
Yeah.
All right, Tim. Well, thanks so much. I look forward to having you back on soon. Let me know when you get your website and all that stuff set up, and we'll bring you on again.
Absolutely. Thank you, sir.
Thank you. Take care.
Take care.
Guys, that was Tim Blotzer. You guys know him. The Rubber Ducky is his trading strategy out there with options. It's an interesting one. Just basically doing spread trades on options daily. So he mentioned you got a Monday, Wednesday, Friday SPX option expiration. He focuses a lot on those. But also, he looks at earnings, which is stuff that's very volatile. Depending on how the strategy is and how it's set up, that volatility can be your best friend. I, for one, get a little nervous with volatility, although today actually did sell some premium, collected it because the premiums just seemed really, really high today for some of these indexes, higher than I think it should have been. All right, Brendan says, Brendan thinks we're all crazy because we trade the S&P. I'll tell you this. You said that the S&P is more volatile than crypto. You are wrong, my friend. Definitely wrong there. And while normally you and I agree on everything, if you look at the average true range, how much the security moves like on a daily basis, the S&P 500 right now is moving about 1.8% per day, whereas Bitcoin's moving about 4.3% per day. Volatility, gotta say Bitcoin, crypto is going to be higher there. But hey, we all have opportunity in different instruments. I, for one, am in both of those, and I know Brendan would prefer to be in cryptos and metals, which have also looked pretty decent lately. See if I can bring up the chart here. We had gold up earlier, so bear with me as I get these charts back to normal. I kind of moved them around to go with Tim's talk track there. But here's your gold. finally a little bit of a bounce off a fairly predictable bounce point, right? You kind of would anticipate it bouncing off those September lows, which you saw today. Gold looking decent at 0.88%, but don't get too happy because it does still have this big downtrend piece going. Got to be careful there because getting a little too overzealous and trying to buy this dip, you are coming right back into an overhead supply level that, to me, really looks like it's going to turning it back around right around 1900. So careful with that one on gold. But yeah, I am definitely a fan of all the asset classes as long as we just be good risk managers and the ability for us to not let something get away from us, regardless of the market volatility. Then trade anything, right? Just make sure you understand the risk at all times. All right, what else we got? Baldy Merlin, do you ever chart premiums when selling puts to collect premium? No, I don't. I'm kind of like Tim when it comes to options. It was just, I looked out and I said, you're going to pay me how much for how many days? And I looked at it last week and it was just nowhere near the same amount of premium. I was like, okay, I'm in the strike prices that I sold the puts for. I'm actually totally happy owning it at that price. So if it did, I'm fine, right? I've collected a lot of premium, and you're going to basically give it to me at the price that I wanted initially. So I'm okay with that. Did that on IWM and SPY today. Let's see what else we got. Cannabis stocks are smoking. It's funny, we did a show for OTA asking about or talking about the election. And tomorrow, by the way, guys, Larry and I were going to do an election show, which we've conveniently and politely called Red, White, and Spew. Because I don't know about you, maybe some of you actually enjoy this, but I'm just so sick of this election. I'm so sick of both parties. I'm so sick of both candidates. I'm so sick of my phone blowing up almost 24 hours a day. Hey, vote on this measure. Vote on that measure. You should do this. You should just shut up and stop telling me what to do. I'm an informed voter. I'm going to go do my research, and I'm going to go out there and vote. As a matter of fact, I will be at the voting office in 19 minutes will be my time to hit that voting office because it's just right down the street. So everybody go out there and vote. Yeah, by the way, I know we got a lot of LA people in here. How about them Bears last night? The Rams. Let's see. The other question that came in, and I know this is one that's been a regular, has been looking at the marijuana industry, that whole sector. And today, as you can see here on the MJ ETF, a nice pop to the upside. Still, while it did have a big move today, the chart just doesn't look that great. I'm kind of waiting to see if it break above 12. I think you're now going to start to see a much more upside movement, but that's still 57 cents away. So MJ, yes, it had a great day, but still a long way to go until it gets back to those points of prosperity. I think it is kind of pricing in a Democratic victory, maybe. Maybe we get people getting a little bit optimistic here, but we could say the same thing about alternative energy ETFs who are just soaring. So I don't know. I'm not putting my vote on either party winning. It's safer just to stay out of it. Kanye West, huh? Let's go Yeezy, right? Woo woo. Jeff says, how do you find those options trades with its premiums? What do you search? I generally, Jeff, I'm just out there looking at the index ETFs. So usually it's Russell, S&P, and NASDAQ are the three that I'll be looking at, and I'll just look at the different option chains and say, okay, what are you paying for different expiration dates? So the options I sold today, those puts were for Friday. And I just looked at it and said, yeah, I don't want to go too far out because I think that's a little bit too much uncertainty. And I'd rather just sell and collect a quick, as he says, a quick nickel. Or what was it? Slow nickels, fast dimes. To me, that would actually be more of a fast dime because it's a 4-day piece. But yeah, that's how I'm doing it. You can generally find those ones that have a really high premium by the amount of volatility. So when you look at a filter and look at the biggest gainers or losers on the day, generally those are the premiums will be really high on those because of the volatility, and people are using options as a hedge for those. What about them Hawks? Yeah, it's a good one too. Unfortunately, the Niners look like garbage. I hope Jimmy Garoppolo just disappears altogether so we can get our backup quarterback. He looked damn good. Brendan says, I'm Canadian, but I vote for John McAfee. If he can get out of prison, he might make a crazy president. Yeah. Who knows? That guy would be a very, very different one. All right, guys, I didn't get a chance to map out your economic and earnings calendar for tomorrow. I apologize. I was just too busy trying to get other things set up here for today. So I will do it on the fly and try to do this live for you. Let me bring up the earnings calendar and that economic calendar. From the economic calendar perspective, today was all manufacturing, and most of the numbers were in line with expectations, so no big deal there. Tomorrow, you're looking at, obviously, the election will be the main thing. You also have, I know a lot of people don't trade the New Zealand dollar, but you do have some announcements coming out from New Zealand, which is going to be the unemployment rate. That's one of the bigger announcements for tomorrow, other than the U.S. election. Now, with regards to earnings, of course, we had 206 companies report this week. I think there's 1,455 reporting over the course of the week. Some of the bigger names that you can expect tomorrow, you've got SoftBank, and that's pretty much it. You have Eaton Corporation, maybe Emerson Electric, Thomson Reuters. Not a lot of major names reporting. Johnson Control, those are reporting tomorrow, but it's really not it's starting to get some of the second-tier earnings announcements reporting tomorrow. All right, so I think that's going to do it. I think that's going to do it for me for today. Tomorrow, who do I have on tomorrow? Oh, my brain's going to just fry. Oh, yeah, Larry Jacobson. Duh, we're doing election, red, white, and spew. The sickening, we're going to call it. Hopefully this will be done, and maybe we can be a little bit more candid because it's not on Online Trading Academy's website. This will be my show, so I don't have to worry about people controlling what I say or being too careful. So we'll have a political show tomorrow. Obviously, not going to get too political, but Larry Jacobson will be my guest. We'll love to analyze things. If you have something you want us to check out, let me know. I'd love to analyze markets for you. I have specific charts. Happy to check that out as well. Last one before I go, because Oscar just threw this one out here. He says, what's your thoughts on JLL? Don't know anything about them. The chart looks pretty bad. The only thing I would think here is if I was an options trader and I'd be doing spreads on this one. I mean, it hasn't broken above 120 really for the past, since March. So you're looking at 8 months. And hasn't gone down below that 90 mark. So it's just been sideways. This is not something I would be interested in as an investment or longer term, even though it's had 2 days of pop. I haven't taken the time to look and see what's moving JLL. One thing I'm kind of curious about, and just to see the volume on this one. Yeah, this wouldn't even make my radar anyway because the volume is only, its average is 400,000 shares traded per day. Most likely, I am going to be looking at something that's going to be minimum 1.5 million shares traded per day. So this wouldn't even make it on my filter. So sorry about that one there, Oscar. All right, what else we got? Okay, cool. Perfect, everybody. That's going to do it for me for today. Again, if you like the show, do me a favor, hit the little thumbs up button. If you have something you want us to maybe dive into a little bit on tomorrow's election special show with Larry Jacobson, you can always send me that. Go to TraderMerlin.com. You can send it in there or just put it down below the YouTube video chat here. I would love to get your feedback and see where you guys want us to go with tomorrow's show. That will do it for me, everybody. Thank you so much. Get out there and vote tomorrow. Of course, I'll be bugging you tomorrow to go vote as well, but hopefully we all do our part. Go vote. Make sure you vote yes on, I think it's 22 because I don't want to lose my Ubers. Take care, everybody. I'll see you tomorrow.